Okay, today we'll see the example number 24. From the following statements and information furnished by Mr. Raj, prepare trading profit and loss account for the year ending 31st March 1991 and balance sheet as on that date. They asked to prepare the balance sheet and trading profit and loss account. So, first of all, you have to prepare for the missing information, then go for preparation of trading profit and loss account. First requirement of our missing information is statement of affairs. Okay, the statement of affairs is already given in the problem. 31st March 1991. Opening statement of affairs or opening balance sheet is given in the problem. Liability side creditors are there, capital is there, and everything is given regarding opening statement of affairs. Then second is cash book. In the cash book, debit side balance is cash and bank. Both the balances are given. In the yesterday's problem, only cash balance was given. In the yesterday's problem, only cash balance was given, but in this problem, cash and bank balance both are given in the debit side of the cash book. Therefore, it is the hybrid system of cash book. Hybrid system of cash book where they recorded cash and bank transaction in the single column. In this type of account, I already prepared in the previous class. Okay. So, first statement required is statement of affairs that is given in the problem. And second statement required is the cash book. And in the cash book, opening balance and closing balances are there. Then it is the purely cash book prepared one. There is no necessity of preparing opening statement of affairs and cash book. And third requirement is regarding debtors account and creditors account. You have to go for debtors and creditors. Regarding debtors, there are two accounts. One is debtors and bills receivable. And about creditors, there are two. One is creditors and another is bills payable. Okay. So you have to prepare creditors related account, debtors related account. That is the only requirement for you people. Thereafter, you go for preparation of trading profit and loss account and balance sheet. Okay. So now I go for the explanation of the each item. The first item, this is the opening creditor goes to opening balance of the creditor's account. Second, bills payable goes to bills payable opening balance. Third, capital goes to balance sheet. Capital goes to balance sheet as opening capital. Then cash goes to cash book, opening cash balance. It is already taken here. Okay. Then the bank balance, opening bank balance goes to opening cash book. It is also taken in the cash book. Okay. The next is bills receivable goes to bills receivable account opening balance. Debtors goes to debtors account opening balance, two balance brought down. Stock in trade goes to trading account debit side opening stock. Furniture goes to balance sheet. Furniture goes to balance sheet asset side. Plant goes to balance sheet asset side. Like this you have to remember. Then come to the cash book. Opening balance is taken from the opening statement of affairs. Already I explained it. Then cash sale goes to trading account credit side by sales. Then two debtors goes to debtors account credit side by cash. Then bills receivable goes to bills receivable credit side by cash. The next is drawing. This drawing goes to balance sheet deducted in the capital. Next is wages. Wages goes to trading account debit side. Then creditor. Creditor goes to creditor account debit side to cash. Bills payable goes to bills payable account debit side to cash. Then buy expense goes to P&L account debit side. Buy rent and rates goes to P&L account debit side. Buy balance carried down cash and bank. Cash and bank goes to balance sheet asset side. These two goes to balance sheet asset side. Okay. In this way, you have to enter the transactions relating to opening statement of face and cash book. Okay. Once you complete this process, go to the next part, third part, adjustment. In the adjustment, creditors closing balance is given. Okay. Creditors closing balance goes to creditors account debit side to balance carried down 25,000. Then debtors goes to debtors account credit side by balance carried down. Bills receivable goes to bills receivable account credit side by balance carried down. Bills payable goes to bills payable account debit side to balance carried down. Okay. Then stock in trade goes to balance, trading account credit side first. Closing stock goes to trading account credit side first, then goes to balance sheet. Okay. Bills receivable dishonored. Bills receivable dishonored first comes in the debtors account debit side. Bills receivable dishonored first comes in the debtors account debit side. Then it comes in the bills receivable account credit side as by debtors account. Okay, debtors account. And next is bills payable dishonored. Bills payable dishonored. This comes in the creditor account credit side first. Remember this, credit side first. By bills payable dishonored. By bills payable dishonored. And then goes to bills payable account debit side to creditors rupees 2,000. Remember these 2 points very carefully. Then next is bills receivable endorsed. Bills receivable endorsed during the year. I think you know the endorsement of bills receivable. Means the first bill receivable, first bills received from the debtors. Okay, instead of paying the cash, your customer gives the bills receivable. On the maturity date, they give the cash and bill receivable is discharged or cancelled. This is the process. Okay, you see here. First, debtor gives bills receivable. Debtor gives the bills receivable. And whenever bill is received, it is recorded in the debtor's account, credit side by bills receivable. And the same bill is endorsed means putting a signature on the back of the instrument. Putting a signature on the back of the instrument and giving the same to your supplier. Supplier means creditor. Supplier means your creditor. Instead of writing a bills payable, Instead of writing a bills payable, whatever bills receivables you are having, the same bills receivable may be given to the creditors by putting signature on the back of the instrument is called as endorsement. If this bill is given to creditors, if this bill is given to a creditor, it is first received from the debtor. Debtor gives the bills receivable. So it recorded in the debtor's account credit side. And bills receivable account debit side. Bills receivable. Okay, bills receivable. Afterwards, if the same bill is given to, creditor, that is called as endorsement. That is called as endorsement. If the same bill is given to creditor, endorsement, therefore creditor receive the bill. So creditor balance reduces and bills receivable also reduces. Therefore, this is to be recorded on the bills receivable credit side. Asset reduces, so it is comes on the asset account credit side. And creditor also reduces, creditor's account debit side. You have to enter. This is called as endorsement. Okay. Once again, I'll tell you regarding this. Bills receivable endorsed. Here you have to enter. First in the creditor account debit side. Second in the bills receivable account. Bills receivable account credit side. Remember this. Creditor account debit side. Bills receivable account credit side you have to enter. Journal entry is debit the receiver, credit the giver as per old system. And as per new system, debit the decrease in asset, credit the decrease in the liability, credit the decrease in the liability, credit the decrease in the asset. This is the journal entry. So bills payable, receivable value decreases, you credit it, and creditor account decreases, you debit it. This is the journal entry as per your new rules. Okay. Next, discount allowed comes in the debtor's account credit side. Then discount received comes in the creditor account debit side. You enter the items and find the missing information. Okay. Next, I'll go to the preparation of the account. First, I'll prepare the total debtors account, bills receivable account. Okay. Total debtors and bills receivable account. From the starting, you go from one by one. Okay. First, debtors account you open. In the debtors account, first you take the to balance brought down. To balance brought down from the opening statement of affairs. From the opening statement of affairs, you take the balance. Opening debtors is opening debtors is 25,000. Okay. And you take the bills payable, bills receivable opening balance. From the opening statement of affairs, it is 20,000. First two balances are taken from the opening statement of affairs. Then go to cash book. In the cash book debit side debtors is 80,000. So it is by cash 80,000. And cash book debit side bills receivable is there. It comes on the credit side of bills receivable account by cash 75,000. Cash book portion completed. Then come to the adjustment. In the adjustment, debtors closing balance is given. Debtors closing balance is given. You record the closing balance 40,000. Then bills receivable closing balance is given. Closing balance by balance carried down amount is 30,000. Okay. Balance is completed. Then come to the stock in trade is there. Bills receivable endorsed, dishonored. Bills receivable endorsed comes from the debit side of debtors account first. Bills receivable endorsed, debit side, you take the same to the credit side of the bills receivable account. By credit, it is debtors. Okay, by bills receivable dishonored, debit side you enter, then you take in the bills receivable account credit side as by debtors. By debtors amount is 5,000. Okay, 5,000. Then next transaction is bills receivable endorsed. Bills receivable endorsed you record in the bills receivable endorsed credit side of the bills receivable. Endorsement of bills receivable means transferring the bills to creditors. So bills receivable amount decreases, asset amount decreases, so it is to be credited. By creditor 15,000. You may write as bills endorsed. For your reference purpose, in the bracket you write endorsement of bill. Okay. By creditor. In the creditor account, this comes in the debit side. Remember this point. Bills receivable endorsed. After this, there is a discount allowed. Discount allowed take in the debtors account. By discount 1,000. Then the transaction completed. Okay. Now I'll go to next slide related with the creditors and bills payable account. Total creditors and total bills payable account. Again, I'll go to start from the statement of phase. In the statement of phase, liability side creditors is there. So by balance brought down 20,000. Second, bills payable in the statement of phase. By balance brought down 40,000. These two taken from the statement of phase. Statement of phase portion completed. Come to the cash book credit side. Cash book credit side first is creditor. Cash book credit side first is creditor. You record the creditor as 2 cash, 35,000. Next bills payable 2 cash, 60,000. These two taken from the cash book credit side. Okay, these are related with creditors and bills payable. Okay, cash book portion completed. Go to the third part, adjustments. In the adjustment, creditor closing balance is there. Creditor closing balance. You take the creditor closing balance. 2 balance carried down. 2 balance carried down 25,000. And next is bills payable closing balance. 2 balance carried down 50,000. Okay, 50,000. Next is come to the next. Bills payable dishonored. Bills payable dishonored. First you take in the creditors account credit side. By bills payable dishonored 2,000 rupees. And you take the same in the bills payable account as 2 creditors. 2 creditors amount is 2,000. This is bills payable dishonored or unpaid. Bills payable dishonored or unpaid. Okay. Then bills receivable endorsed. Endorsed means transferred from the debtors to creditors. So when bills receivable is given to creditor, it is just like cash given to creditor. So in the debit side, you record as bills receivable endorsed. I recorded here. Okay, but not recorded in the bills receivable account. You may record the same in the bills receivable account as in the bracket endorsed. Okay, this is the amount 15,000. Bills receivable endorsed. Then next point is discount received. Discount received comes on the debit side. to discount rupees 2000. 2000. Okay. All the points completed. Now I start the process of closing the account. First, I will close the bills payable account. Total of the bills payable account is 1,12,000 debit side. And I'll take the same to the credit side. Difference is 72,000. What is this 72,000? You remember. Credit side items. One is balance brought down is there. Second is the creditors account. Okay, you give name creditors account for this. Creditors account. Creditors. In the creditors account, you write as to bills payable, 72,000. Creditors account. Now you close the creditors account. You close the creditors account. Take the total of the debit side. Debit side total amounts are more. Therefore, take the debit side total. 1,49,000 is the total. 1,49,000 is the total. Then difference is 1,27,000. What is this 1,27,000? What is this 1,27,000? This 1,27,000 is the credit side item is balance is there. Second important item is credit purchase. By credit purchase. Okay. Creditors account. Now I collected the credit purchase for trading account. Okay. Now go to previous accounts. That is, I will close the debtors account and bills receivable. First, close the bills receivable account. Take the total of the credit side. Credit side total of the bills receivable is 1,25,000. Then difference is 1,05,000. This 1,05,000 debit side item in the bills receivable account, debit side item. Main item is to debtors account. To debtors account is the important. So here you recorded two debtors. In the debtors you write as bills receivable. By bills receivable 1,05,000. Okay. Now you close the debtors account. Debtors account total credit side is more. Therefore you take the total. 2,26,000 is the total. 2,26,000 is the total. Then difference is 1,96,000. This 1,96,000 is in the debit side. Debit side opening balance is there. Next important account is credit sales. So you give the name credit sale. Okay, you see the trading profit and loss account. It is simple. There is no such type of complicated adjustments. First, you take the opening stock from the opening statement of is 20,000. Then you take the purchases. Only one purchase there, that is the credit purchase, not cash book. In the cash book, there is no purchase. Therefore, you take credit purchase from the creditors account, 1,27,000. Next, you take the wages from the cash book. Third item is in the cash book, wages, 20,000. Okay. Now come to the credit side. Credit side sales. There are two sales. Cash sale is in the cash book and credit sale is in the debtors account. So credit sale in the debtors account is 1,96,000 you calculated. Then in the cash book, debit side cash sale is 35,000. Total of this is 2,31,000. Okay. Then you take the closing stock. Closing stock from the trading account, closing stock, or from the adjustment. 30,000. Close the account. Difference is gross profit. 94,000 is gross profit. You take to the P&L account part. By gross profit 94,000. Then you go to the cash book credit side. There are certain items. First is expense is there. Credit side. Cash book credit side expense is there. You take that expense 30,000. The next is rent and rates. Second item rent and rates is there. That is 20,000. Okay, these two from the cash book. And go to the creditors account, debtors account. There are certain nominal accounts. By discount from the creditors account debit side. Creditors account debit side, you take the buy discount 2000. And debtors account credit side, there is a discount allowed. You take that 1000. Okay. Or this is the information. You close the account and take the net profit. Net profit is 45,000. Okay. Net profit 45,000. Now you go to balance sheet. This is the balance sheet of Mr. Raj as on 31st March 1991. Okay. First you take the capital. In the capital, first item is opening capital. Opening capital is 1 lakh. Add net profit. Net profit is 45,000. Additional capital nil. Interest on capital nil. You take the total. Total is 1,45,000. Okay. Less drawing. Drawing in the cash book. Cash book. Credit side first item. 12,000. You deduct 12,000. Closing balance of capital is 1,33,000. Next, you take the creditors account closing balance from the creditors account. Creditors account closing balance. Then you take the bills payable closing balance. Bills payable account closing balance. Okay, account balance completed liability side. Come to the asset side. You take the all account balances. First, you take the cash account closing balance. Cash is 3,000 and there itself bank. Bank is 25,000. Closing balance of cash book is 3,000 and 25,000. Next, you take the debtors account balance, closing balance. Then you take the bills receivable account closing balance. Okay, these are the account balances, closing balances you take. Then stock from the closing stock, 30,000. Okay. Then remaining fixed asset you take from the opening statement of affairs or from the account. You take from the account balance. Okay. Next item is furniture 10,000, plant 70,000. These are the items you take and take the total. Total is 2,08,000. Okay. This is the problem. Tomorrow onwards, once again, I am telling you, every day at 9:10 morning, I'll take your class. Your class time is 9:10 morning. Okay. And you try to attend the class. Tomorrow onwards, till 31st December, I'll engage your class every day morning 9 o'clock 10 minutes. Thank you.